Hey everyone, so today is January 8th, Friday 2021. We had some incredible action today. It all started off with MU earnings. They reported earnings, and as I said in my previous videos, when I see companies report, I normally want to play opposite the gap for the potential full-blown reversal. And here we had MU report earnings last night. A bunch of choppy action. I like to call it the knee-jerk reaction. So I come in, I highlight the levels that were important, and the ranges is sort of formed, so I can use them the next day. Because more often than not, the ranges in the after hours are probably going to be tested again at the market open. So I like to highlight that stuff and use it for future reference. So you see here, gapped up this morning, so you want to be looking for a sell. Anybody who bought is going to be selling, so I want to go in for the short. And you see here, gapped up above the VWAP at the open, ripping to highs. 84.16 was the high of the day, and then you see like a stuff back all the way back to the VWAP. So you don't really want to start short on that pull, on that rip up. You want to start shorting when it's showing signs of weakness. What is weakness? A sign of weakness: breaking back below the VWAP, breaking back below the pre-market ranges. You see it here, going back. These are areas of interest where you would want to short. Here, and always pay attention to the opening candle highs and lows. They're very important, and generally, when they're breaking that opening range, you're going to have more action in that direction. So here you see the opening candle, pretty big, nasty candle. That's one reason why I don't really like trading pre-market, because at the open is going to be that one massive candle to spook you out of your trade. So the high was 83.92 and the low was 82.44. Normally you want to sit back around 10-15 minutes of the open, but if the action starts happening then and there, you can take the trade. But normally try to sit back. So here you see it. Breaking the opening candle low is a possible trade. You can short here. If you really want to play it safe, you want to wait for a VWAP bounce, pop to it, and see it reject and continue lower and break the lower ranges. So here we go. Let's move a little forward. And here's the VWAP pop. Now, you always want to be looking at whole $half areas. Those are areas that are very interesting. A lot of institutions, hedge funds, prop traders, everyone pays attention to those levels. And besides that, it's also a psychological area. So 82.50, guess what? It also aligns with the VWAP. So that's an important level. You want to see it reject and fail. And guess what? Looking weak. Couldn't break back above. So you could start short 82.50. See it test with the risk of this candle, the previous candle high. So what is that? 83.03. So start short at 82.50 with a 50-cent risk. With stocks like this that are more expensive, $80, $100 range, it's impossible to risk 20 cents. You can't. You gotta risk at least $1 or so, because they're gonna have big moves. Look at this candle. This had a whole dollar move. You can't risk 20 cents, 10 cents like a penny stock. You gotta be willing to risk more. So here your trade is defined. Your risk is defined, 82.50 short with the stop at 83.03. So you see here, first areas you want to start taking some off is the lows, potentially a whole dollar area, 81. And actually, I have the 5-day chart. Well, 5-day VWAP, so let's bring it to 1 day. And, well, here's the whole day. And guess what? You want to start looking at the areas from yesterday. These areas, the midpoint for potential targets. So you see, went to the areas it was testing, bounced, VWAP, fail, and then here's where the multi-day VWAP comes into play. You wanna 1 minute to the multi-day is the reversal you like to look for. And ultimately, you want to look for that green to red area. So there's like something here. Let me take off this line. There you go. Green to red, you want to look for the full-blown reversal. Gapped up, you're looking for the sell. You want to short, but it needs to give you a reason. What's your reason? Breaking back below the pre-market range. Breaking, can't hold VWAP. You want to ride it down. So you start taking some off on the way down. You always want to lock in those profits. So here you see kind of like it wants to run back to VWAP, but you see it test this deviation here. So if you're still in it, you want to risk 81.50 going forward. Test, couldn't get there still, and down to multi-day VWAP. So then that's when you start looking at other time frames. You go to 2-day VWAP, goes to test it 2. 3-day VWAP goes to test it. Look at that bounce. This was here already before it even went there. So the goal is for the full-blown reversal, but I'm okay with the 1 minute to the multi-day. And that's why you want to sell on the way down, so you can hold some position for further moves, and just keep scrolling down multi-days. You should use them as your targets. Generally, I like to go up to the 5-day multi-day, because that's when the move is generally over, and you can see it here. That's the whole move. Beautiful earnings reversal on MU, gapped up. You want to look for the short, broke all the pre-market ranges below VWAP, showing signs of weakness, going back to test all these levels it tested in the prior extended hours, goes red, and there's a day's pay. Shorten it from 82.50 all the way down to potentially 80 and below, covering along the way, and there's your beautiful earnings reversal on MU. And guess what? I don't even know what this company does. I guess they beat their report. I don't care. They release news, yeah, sure, whatever. Doesn't even matter to me. I don't care about the future of the company. I'm just here to trade a chart and make a day's pay. I'm here to trade the technical analysis, make my day's pay, and just go back to my normal life. You know, come show up every day, bang out a few of these a day, and call it a day. Now, there was other awesome trade, DDD, triple D. So look at this action, freaking insane. Let me go, yeah. So this is an old beat up stock coming out of a bottom dead range for very long. Let me show you guys something cool. You want to see the lifetime VWAP on this? The lifetime VWAP was 26.46, and it happened to go there today. But I want to show you guys a little trick. So when the stock is like, let's say it's IPO, breaking new highs, lifetime highs, you always want to keep these areas in mind. $10, $12.50, $15, $17.50, $20, $22.50, $25, $27.50, $30, $32.50. Because when these stocks get to these areas, it's most likely gonna keep ripping. And that's the type of market that we are in. This is the type of action you're seeing. 15 gets you 17.50, 17.50 gets you 20, 20 gets you 22.50, 22.50 gets you 25. And look at that, right to the penny, came down, it's trapped more shorts, and then a whole nother trade today. Sort of gap down, trending below the VWAP at the open, and right here you can be buying or even wait for the opening candle high break 21.66 with the risk of VWAP. Never came back to test it, so you could even let it rip and come back to test it, or even buying it from red to green. And look at that. So 20 gets you 22.50, 22.50 gets you 25, 25 gets you 27.50, 27.50 gets you 30, and now normally 30 gets you 32.50. But you know, you're already up from 20 all the way to 30. You gotta be selling. You can't be holding this any longer. The trades, you gotta be cashing out. This shit does not happen. This is not normal, but it's working, and you gotta be taking the trade. Don't get greedy on these. Sure, this can probably go to 100, but who cares? You're here for the day trade. Nail it as best as you can and call it a day. And look how it ended up, all the way down. But remember, as I said, the lifetime VWAP on this was 26.66. It's like let's see, 2646. So pretty sick how these VWAPs come into play. I love using multiple time frame VWAPs because they give me a guide of where they're going to go, and normally it works very well. So you can see it here. See it for yourself. Blue line is the 1 minute regular VWAP, standard VWAP that's on everyone's platform. Orange line is the multi-day VWAP. This green line is my green to red, red to green, and these are just deviation bands. So there you have it, guys. No reason to complicate it. I don't even know what this company does. 3D printing, whatever. Doesn't matter. I'm just trading the chart, and that's how everybody should be trading. If you're day trading or you're having trouble finding the edge, this is simple. Just a few set of rules you gotta follow, and just don't get greedy. That's all. But next week, earnings season, I'm gonna be making some videos in the morning, prepping for the reversals, and I'm finally gonna have my broker and trading platform that I could trade freely without PDT, without the PDT restriction. So I'll see you guys on my next videos when I'm prepping in the morning. Have a good one. Let's make some money. If you have any questions, leave a comment, leave a like. So don't forget to subscribe, and I'll see you guys in the next one.